All right, so we are going live on Facebook. I'm going to wait a second here. Should be live now. So, hey guys, Sam Newell here. I've had a lot of questions about how to calculate cap rates, how I do it, how my investors do it, how we do it when we buy these large multifamily properties, as well as duplexes, townhomes, fourplexes. A little background on myself. I've helped sell fourplexes and duplexes for the last 12 years here in Utah. I was part of a partnership where we built fourplexes, duplexes all over Utah, Idaho, and Texas, which was fantastic. Had a lot of experience there selling hundreds of units to investors. And since then, started my own company buying multifamily properties. We now own our partners on just over 2,000 doors across the country and have a lot of clients looking at properties right now. It's really hard to find a good deal with these rates where they are, but they are out there. And I have a few deals I'm pitching to some investors this week that they'll probably pull the trigger on. But today I wanted to go over how to calculate cap rates. I have an investor and a client who I sold a duplex to, and they are thinking about selling their property. So they wanted to know what it was worth. And so I looked at the comps, and I'm going to go over my own little cap rate calculator that I built that makes things easy for me. And I'll share that with you guys if upon request. I mean, there's a bunch of calculators out there. YouTube has a ton of tutorials. You can look it up there. Grant Cardone has really great tutorials. He does all the time for free. Biggerpockets.com is a really great resource. I mean, there's literally a million tools out there. This is the quick and easy way to figure out value or price. Maybe you don't know the rents. You want to figure out what it should rent for based on the going cap rates and the prices that are going in a certain market. So anyways, I'm going to show you 3 different scenarios there, a couple of rules of thumb, and yeah, let's get going. So I'm going to share my screen. Also got a little stick figure playing in the background. Hope you guys don't mind, but I have a newfound love for reggae, and stick figure is my good friend Sean's favorite band. Little stick figure going here in the background. Not too loud, just add a little fun to the boringness of spreadsheets. So, all right, this is where I start. First of all, I'm going to start asking questions to my investors. So those of you that are agents watching this is not an all-inclusive list. There's some really good questions to ask. If they're looking for duplexes, fourplexes, rental properties, or if they already own them, you want to find out a lot of good information. I'm going to zoom in so you guys can see a little bit better. This is just a table that you should build on your own. These are not actual numbers. This is for example. I haven't done this in a minute, but every few weeks, every month, you should be looking at the comps and look at what duplexes, rentals, fourplexes, townhomes that are rented out are selling for and calculate the cap rate. Each area is very different. Within Salt Lake, there's a bunch of different areas: Rose Park, Capitol Hill, close to the University of Utah. Ogden's different, Centerville, Bountiful. So anyways, you want to at least know these pretty well if you're going to be an investment specialist. And it's pretty easy. Just look at the comps. So that's what we're going to do right now. I pulled up some comps. Let me pull it up over here on my other screen so I have it in front of me. Here. And so let's say that you're talking to, or let's say that you own a duplex and you want to know what it's worth. So in this case, you would use net operating income and the going cap rates to find the price. Okay, so I have 3 different scenarios here. The first scenario that I'm highlighting is using the net operating income, NOI, and the price to find cap rate. Okay, so if we know what something sold for and we know what it was rented for, we can figure out what cap rate it's sold at. Now, the assumption I have here is 35% expenses. You can change this to 30, and change this to 40. If you have a little bit more information and you know it's an older property, has a ton of repairs constantly, maybe you use a different ratio, or maybe you get really close and you find out the trailing 12 and trailing 12 month, and then maybe the last few years of expenses and income. The trailing 12 financial is what I'm stumbling upon, trying to find the words here. So yeah, if you have the exact numbers, like a trailing 12-month financial statement, that's great. Most of the time we don't. Most of the time we just have, and most of the time those aren't accurate either, especially with mom and pop operators who maybe don't calculate, taking into account that they replaced the roof 2 years ago. And that's the reason you're usually going to be at 35%. I get a lot of questions about this. How do we know it's 35? Honestly, it's probably closer to 40. You keep a property, 1 or 2 years, you may not have a furnace go out. You may not have a water heater go out. You may not have to replace a roof. But we know from the last couple hundred years of people owning rental properties that over a 5-10 year period, you are going to have to replace those things more than likely. And the way it averages out is usually your expense ratio is going to be about 35%. 35% of what? Your GOI, gross operating income, or your yearly income I have right here. So it's just the way it is. And if you're looking at large multifamily like we look at, you're actually 50 to 55%, especially with these insurance rates going up, especially with inflation. It's really hard to operate 50% or under right now. The reason I really love new properties for my investors is because you're able to operate at maybe at 25 for a few years. Okay. And that's really, really good. But after 3, 4, 5, 6 years, 7 years especially, you're going to replace water heaters, furnaces, things like that. So that's going to jump back up there. So there's rules of thumbs, and then there's always exceptions to the rule of thumb. I'm going to try and keep moving here so it doesn't take too much time. Okay, my second scenario is using the NOI, the net operating income, and cap rate to find the price. And third scenario, using cap rate and price to find NOI, net operating income. These are all very useful, and you need to be able to work back and forth. I can just do it on a calculator, but this spreadsheet makes it really easy. Over here, we have the rents. So, you could add lines and go up to a 30 unit with this spreadsheet. Most of the time, I'm just using this spreadsheet when I'm talking to people with single family homes, townhomes, duplexes, and fourplexes. But again, this is tried and true for any size of a property, as long as you get the assumptions right. So I'm always going off of 35% expense ratio. Again, that's 35% of your yearly income is what you will spend on expenses typically. That's not including your mortgage, okay? So the reason cap rate is such a great tool is we don't know if you're going to buy a property with a mortgage, get a loan. We don't know if you do get a loan, you're going to put 10% down, 25% down. There's lots of different loan programs. There's a brand new one that just came out, 5% down for non-owner occupied, which is awesome. It's not going to cash flow with these rates at 5%, but it's a great tool. So, and you may pay cash. So because we don't know any of those things, and that's going to overcomplicate things, we use cap rate. Cap rate is a ratio of your sales price, your net income, and the cap rate. Okay, so you have those three pieces of information, and it's what nationwide investors and brokers and lenders use to value properties. And of course, the market determines value, and then we just figure out if we're in line with the market. So over here, I'm going to say, let's see, I'm going to look at this duplex I have over here. It's active for sale. Okay. The rents currently are $800 and $1,200. Okay, so you can see it automatically is updating my NOI. And so my NOI is $15,600 based on those rents and based on a 35% expense ratio. And I want to know what the going cap rate is, or what cap rate, we call it the entry cap, if I were to pay this price. And it's funny, this price is very specific. 548,742. Interesting price. So the going in cap rate, the entry cap at this property, at the price they have it listed for, is 2.8. 2.8. That's really low, especially with interest rates where they are. No wonder they're still for sale. They've been for sale for a while. Okay. Now they do have pro forma rents. So let's see, and I would do a rent analysis to see if they're accurate. Their pro forma rents are $1,300, and pro forma is just projected. So the projected rents are $1,300 and $2,000. So So they're severely under rented, and that's not uncommon for people to own properties for quite a while. They feel guilty, or they don't want to go through the hassle of figuring out what rents are. They don't know what rents are. They're not a sophisticated investor, or maybe it was their parents that they inherited and they're just not familiar with how to manage rental properties. Lots of reasons why, but I'm always looking for properties that are under rented. As you can tell, the cap rate changed a lot, 4.69 up from just over 2%. So that's not a bad cap rate in this market. So if I'm a buyer, I am going to do a rental analysis, maybe have my property manager help me with the rental analysis and see if that projected 1,300 and 2,000 is possible. Okay. So I'm going to go to the next one. I want to do a couple of these. Okay, so this property sold. So obviously we love solds because that gives us a lot better idea. They were asking $595, but they sold for $500. So I'm going to punch in 500 right here. And then they were rented for $1,425 and $1,480. Okay, so they sold at a 4.53 cap rate. Again, my assumption is at 35% expense ratio. So that's not bad. That's actually pretty common of, I would say, this market that these properties are in. I'm going to go to the next one. That's pending. I don't want to look at pending. I really want to look at the solds to help my clients figure this out. This one, they were asking $499. They sold for $500 again, so that's good. They actually didn't have any rents for the actuals. So this is all pro forma. So again, if you're helping a buyer, you need to know if you're looking at pro forma rents and if those are accurate or if they're actual rents. And you always want to verify on leases because there's sellers can be tricky or can just accidentally be inaccurate. So they sold at a 4.91 cap rate. So that's very helpful. I'm gonna go to these higher priced ones over here that I have comps for. Okay, this one's in a good location, asking $625, sold for $600. So that's another really good trend. You can tell your buyers that you want to know what the trend is. Are properties selling at asking or under asking? So they did not have actual rents either. So this is pro forma rents, projected rents, $1,700 and $1,500. Okay, so they sold at a 4.16. Dang. Looking at this property, why did they sell for a lower cap? Oh, it's much newer. Newer looking. Wow, built in 73, but this is a great looking property. Literally, yellow counters. Everything else was redone recently, except for, I'm going to show you guys the yellow counters really quick. Why would you do that? Why would you leave? I'll just show you guys this. Nice looking property, redone, and then bam, yellow Formica. I don't know why you spend money doing everything else. Maybe they think they're classic looking. They're sheesh. But really clean looking property. That's why it's sold for more. Okay. Oh, come on. Oh man, what's going on with my internet here? My browser. There we go. Okay, back over there. Okay, so that's pretty much it. Now I want to go over using net operating income and cap rate to find price. Okay, so now I know the going cap rates, and I know this because I already did like 10 of these. The going cap rate for this market was like 4.5. So I've got that right here. And then my specific example for the duplex that is wondering what they're worth, they're rented for $1,450 and $1,650. Whoa. So this tells me that based on 35% expense ratio, based on their yearly income, based on a 4.5% cap rate, they're worth about $537. That's great. Now, the last example, and I know they want more than that, by the way. So, okay, so let me do this last example. I know they want like $575. So So we're going to use the cap rate and price to find the NOI that they would need to get to that 575 price. Okay, so there's the 575 price. 4.5% cap rate. So their yearly income, and I guess I'll throw this out here, needs to be 39,808. Well, we're going to say equals this divided by 12 divided by 2. 2 units, 12 months. They need an average rent of $1,659. They're just not quite there. So that's a really good conversation you can have with a seller. Like, hey, you want 575 based on the current market. That's not going to happen unless you're hitting close to $1,650 a month. So, Mr. or Mrs. Seller, do you think your property is under rented? So let's throw on the pro forma, go up here and say, yeah, we can hit, we're probably under rented at $1,650 each. And all of a sudden, yeah, you're close to that 575 price here. Now, what if they say, well, my property's way newer, which this property is, and it's actually a little bit more similar to that last comp, so maybe we can sell it just like that other comp did, maybe a 4.1, 4.15. So let's throw that in here. And it's only like a 4-year-old property. So without raising rents, did that update? Did. So sheesh, at a 4.15 cap rate, they actually probably get higher than the 575 they want. Now I know this location well, and I'm looking at this other location. This other location was really, really good. And I think, that's why it sold for more. So I'm going to tell my clients, you just can't compare the location. So even though you're newer, I don't think you're going to sell for much lower than a 4.25 cap rate. We can try it. But also look at the trend. The trend is that everyone's selling for about 25,000 less. In some cases, the sold comps are 50,000 less than asking. So anyways, guys, I hope that helps. Happy to walk through this with you a little bit more. I will send this out in an Excel. Get out there, talk to investors, be helpful, be useful, add value, and also buy some investment properties yourselves. I'm looking at buying a couple more myself this year. And anyways, happy Wednesday, everyone. Thanks for watching. Thanks for listening. Take care.